it is more than clear that this decision had no other goal but to blackmail the will of the Greek people and obstruct the smooth democratic process of the referendum.
We have always advocated a balanced deal.
We really moved mountains until the very last minute when Greek authorities closed the door.
There will be uncertainty, but I think things will settle down in a day or two.
I mean, so far India is behaving in line with other Asian markets.
Is the Grexit inevitable? That is the question that everyone's asking, and it's actually quite possible as different sides play the blame game over who actually allowed the situation to reach such a point. It's the common man in Greece who's finding it increasingly difficult to meet their daily needs, Nandara.
That's right. You know, the possibility of empty ATMs, these people not getting their pensions. The big story is Greece committing suicide? Every European leader actually passing on the buck and saying this entire crisis is actually Greece's fault. And all this while the European Union is still trying hard to ensure the union doesn't fall apart.
Good evening. Thanks very much for joining us on India Business Hour. That, of course, is the top story that global markets are watching very, very closely, and so are we here in India. Let's take you through other headlines this evening.
Impact it has on India depends on what impact it has on the euro.
So far, no cause for worry.
The Indian Finance Ministry puts on a brave face. The Revenue Secretary tells CNBC TV 18 he expects the Indian equity markets to stabilize within a day or two. The Chief Economic Advisor says India will not be very adversely affected by the Greek crisis.
Indian markets overcome the pain from the Greece crisis to post a remarkable recovery in the second half of trade. The Nifty recovers from lows below 8,200, ending above 8,300. Heavyweights like Icici, Icici Bank and L&T aid the recovery.
Tech Mahindra becomes the third IT company to raise a red flag, says revenue growth in the first quarter of this fiscal may be hit by high visa costs and delays in deal closures. The stock drops 7%.
In his last address to shareholders, as ICICI Bank's Chairman KV Kamath says the government's focus on the ease of doing business will boost economic growth. Managing Director and CEO Chanda Kochhar says the bank will focus on leveraging technology to capitalize on growth opportunities thrown up by the economy.
Ace banker Uday Kotak says market watchers should not look for steroids as the India marathon story is already playing out. Cautions shareholders at Kotak Mahindra Bank's 30th AGM that excess leveraging by Indian corporates has put sections of the Indian banking system at risk.
The sun may not set just yet. CNBC TV 18 learns that the Law Ministry has endorsed the Attorney General's opinion that cancelling Sun Network security clearance will not be tenable in a court of law.
The Competition Commission is set to revise its combination regulation for the fourth time in many years. The CCI Chairman Ashok Chawla tells CNBC TV 18 the main objective is to ensure no applications are filed incomplete.
A 6-year wait for Chennai's commuters ends as the first Chennai Metro pulls out of the station at 40 rupees for a 10-kilometer commute. It's India's most expensive so far. Well, all of that and more coming up for you in just a bit, but let's begin with the event that has global financial markets on the edge, the Greece crisis. Things came to a head over the weekend with Greece walking away from negotiations. Greece Prime Minister Tsipras blamed the package proposed by the Eurozone as being too austere and against the interests of the Greek people. This means that Greece will miss its June 30th deadline to make a €1.6 billion loan repayment to the International Monetary Fund. For Greece, however, the next step is a referendum that will take place on the 5th of July, a good 5 days after the repayment deadline expires. Greek Prime Minister Tsipras has said, and I quote, whether we should accept the extortionist ultimatum that calls for strict and humiliating austerity without end and without the prospect of ever standing on our own 2 feet socially and financially, end of quote. The answer to this question will also determine whether the country stays on in the European Union. Meanwhile, the Greece government has imposed capital controls and forced a 6-day bank holiday across the country. Banks have been asked to remain closed till the 6th of July, though a Greek official is being quoted as saying that some branches may open a day earlier to process pension payments. The bank holiday extends to branches of foreign banks as well. ATM withdrawals have also been capped at €60 per day per card, but even this may see some relaxation as the week wears down. However, many machines are already reported that they have run out of banknotes. Online transactions and payments using debit or credit cards will continue to work as normal, but only for transactions that are within Greece. Now, hitting out at the latest austerity package proposed by the European Union, Greece's Prime Minister Icici Tsipras has said the country will not bow down to what he calls blackmail.
It is more than clear that this decision had no other goal but to blackmail the will of the Greek people and obstruct the smooth democratic process of the referendum. But they will not succeed. These moves will bring precisely the opposite result. The Greek people will be more resolute in its choice of rejecting the unacceptable bailout proposals and the ultimatum of lenders.
And that's Icici Tsipras sticking to the stance, and that has evoked scathing remarks across the Eurozone, with almost every European leader blaming the Greek authorities for the crisis taking a turn for the worse. German Chancellor Angela Merkel came out in defense of the proposals made by the creditors, saying these were one of the fairest offers that could be made to a debt-strapped country. She also said Greece had shown no signs of flexibility so far, and that if the EU does give in to Greece's demands, it would go into the making of the entire union as unstable. Merkel's reactions came soon after the European Commission President Jean-Claude Juncker hit out of the Greek authorities for walking away from those negotiations. He said the European Commission had been doing all it could to ease Greece's burden. He said Greece should not commit suicide. In the same breath, he said he is hopeful Greece will not exit the union.
There are no wage cuts in this package, and nobody is allowed to give the impression that there are wage cuts in this package. There are no pension cuts in this package. No pension cuts in this package. In fact, it's a package which creates more social fairness, more growth, a more modern and transparent public administration. You should be aware that in many instances, we in the European Commission had to be the ones on insisting on the most socially fair measures. I would have expected the Greek government to push this agenda in line with its campaign manifesto. We really moved mountains until the very last minute when Greek authorities closed the door. All elements of a credible and comprehensive deal were on the table. So I don't have, not according to recent press infos and news, I don't have to make new proposals today. I'm describing the proposals which were on the table and which were of a nature that we could have, I have to say, easily reached an agreement at the Eurogroup meeting of last Saturday. What do the Greek people know about our flexibility and determination to help them? What do they know about the details of our common proposals? What do they know about this latest offer? We were obliged not to take influence on the Greek votes, but to inform the Greek public of what is on the table. What did they know about this offer we published yesterday, putting together all the elements of the debate we went through together with the Greek authorities?
Well, that's a tough message there from the ECB president, telling Greece not to commit suicide. So what does the future hold for Greece? CNBC's Julia Chatterley spoke with IMF chief Christine Lagarde on the Greece crisis. Lagarde says that there has been a lot of progress on the front of the IMF, and that the IMF was at a point where the arrangement that has been presented has been significantly diluted compared with the previous arrangements. Here's Lagarde saying that they've done the best that they could.
Well, I would remind everybody that Greece is under a program with the IMF until March 2016. So what has been discussed today are the European financial arrangements, which are due to expire after a previous extension on June the 30th. And of course, everything is going to depend on the developments in the next few days. But as far as we are concerned, Greece is a member of the Eurozone. When they're prepared to talk and to continue negotiations, we stand ready to do that. We have constantly in the last few days showed a lot of willingness to progress, flexibility in what they can adjust to, and we stand ready to continue doing that.
Are you willing to provide more flexibility, though, even from today? Because they're saying already they're going to meet an ultimatum with an ultimatum of their own, which is effectively what they're saying they've done.
You know, this ultimatum discussion is a bit over the top, because there has been a preliminary position, successive iteration, modifications, movements, and so on and so forth. So I think there has been a lot of progress, and we are at a point where it has been significantly diluted compared with the previous arrangements. Just to give you an example, the fiscal targets have been significantly reduced. The structural reforms that are so necessary for the Greek economy to transform itself have been reduced as well, focusing on the principal ones, the ones that are more adjusted to the political and economic new situation in Greece. You know, at the same time, we have always advocated a balanced deal. It has to include all the necessary reforms, growth-friendly fiscal consolidation on the part of Greece, but also on the other side, a contribution to the financing in the next few months, and assurance that going forward there will be a sustainable debt, which means most likely a debt operation. And it's really that sort of balanced approach that needs to happen.
Well, that's the IMF chief, Christine Lagarde, in conversation with Julia Chatterley. In fact, Julia joins us live now from Athens. Julia, we were just listening into your conversation with the IMF chief. What is the latest that you're picking up on the ground? News agencies are reporting that the EU has approved an extension of a Greek guarantee program for the banks. Also, what's your sense as far as the referendum is concerned?
Well, there's a lot of items to cover there, quite frankly. As you heard there, Christine Lagarde taking a pretty tough tone, actually, with the Greek government. It echoes what we heard from Jean-Claude Juncker, one of the key negotiators today. There will be no further proposals on the table. The Greeks know what's on offer. What we heard today was the Greek Prime Minister really hitting back, saying, look, the creditors need to understand the situation. And when we get to this referendum, if it goes ahead on Saturday or Sunday night, then the people are going to do, and they're voting out of fear. Because of what we've seen here today with the capital controls and people being restricted just to €60 amount of cash that they can take from ATMs, this is going to mean that the people vote yes to more austerity, yes to continued relations with Europe, because they have to, because they're afraid. And he said that's not right. So there's still a lot of concern about just what understanding the people have of what they're going to be voting for in this referendum. Do they understand that if they vote no, that could ultimately mean no to a future in the Eurozone? Now, I'm sure you can hear the noise behind me. I'm going to step aside and let you see what's happening behind me in Syntagma Square, which is in central Athens. This is a rally building that's taking place tonight for the no voters, so those people that want to break with the creditors. They don't want to sign on to further austerity. The crucial question here is whether or not the people vote no or they vote yes to continue the relationship with Europe, and what happens to Mr. Tsipras, the Greek Prime Minister, if they choose to do so. I spoke to a Syriza MP, so this is one of the government MPs today, and I said to him, if the people vote yes to continue with a programme in Europe, Mr. Tsipras should surely resign, shouldn't he? And he said yes. He said Mr. Tsipras will resign. So what we're talking about here is not just the turmoil that we're seeing now as far as capital controls are concerned, but we're also talking, even in the best case scenario, that the people choose to stay in the Eurozone and keep Greece in a programme, we're going to see political turmoil too. So there are many unanswered questions questions at this stage, but for now at least it seems a lot of pressure and a lot of concern for Greek people about what the future brings. Back to you.
Absolutely, and the future is mired in uncertainty. Julia Chatterley, appreciate you joining us here, and we will of course keep checking in with you. There are developments practically every minute on this story, so we will keep checking in with you. Thanks very much for your time. And while the Greek government may continue to play the blame game, the European Union has now found support within the country. The Greek opposition parties are now calling on the need for Greece to remain within the European Union. New Democratic Party spokesperson Dora Bakionis says all the opposition parties need to come together to ensure that Greece does not exit the European Union.
All the pro-European parties together, we will fight, and I hope we will win, because I'm absolutely certain that the Greeks want to stay in Europe and want to stay in the Eurozone. But we have to explain what this referendum is all about. And what we are seeing, unfortunately, is that our government, this leftist plus ultra-right, is supported by all these forces inside the European Union who want the complete destruction of the Eurozone. Look at Mrs. Le Pen, look at the other ones who from the very beginning said that Greece has to go out of the Eurozone. So this is the fight for Europe, not only for Greece, but also for the European Union, the Euro itself.
The people in Greece may not just have to deal with capital controls, but even a political turmoil. And how is all of this going to impact India? The chief economic advisor, Arvind Subramanian, feels that the situation in Greece is definitely not going to impact India too adversely. Meanwhile, the Finance Secretary, Rajiv Mehrishi, feels it will take a day or two for the Indian markets to find some stability and shrug off the Greek crisis. Listen in.
I mean, so far India is behaving in line with other Asian markets, I think.
No cause for worry, sir?
So far, no cause for worry.
What impact it has on India depends on what impact it has on the euro. So we are indirectly affected. Whichever way euro moves, that will impact us. So I believe that the dollar has already appreciated 1% against the euro, and which means either we appreciate against the euro or we depreciate to keep the same balance. Either way, I don't know how the markets will react, but markets are not reacting very well, I believe, this morning. So there will be uncertainty, but I think things will settle down in a day or two.
So apart from this, any possible impact on exports and any kind of a strategy that we will now devise, or we are already aware about it? You know, I mean, there definitely must be an action plan which is always there with the government for this kind of a situation.
No, these are dynamic situations, and one has to take decisions on a daily basis, depending on the dynamics at that point of time. So yes, the broad action plan is to see that the exports are showed up to the extent possible. There has been a decline in the recent months, and but largely on account of oil exports. So there is, but you know, you can't have a sort of strategy cast in stone. I don't think the impact in any case of Greece exit will be very major. Greece default rather will be very major. But whatever it is, it will come to us via the euro and the dollar-euro exchange rate.
Well, reactions coming in from the Indian government allaying concerns of the possible impact of the situation in Greece on the Indian markets. Now, if there was any equity market which showed resilience in trade today, it was our markets, where we saw a pretty smart recovery in the second half of trade. So while the Nifty fell below the 8,200 mark in the early hours of trade, as that graph tells you, we saw a pickup in the day, finally closed above 8,300. Similar story playing out for the Sensex, which regained pretty much a majority of its loss suffered through the day and ended the day above 27,500. It was the heavyweights like Icici Bank, ITC and L&T which helped the markets make up for a majority of the loss as well. We've been speaking with market veterans today, Njay Kumar and Vikas Khemani, earlier in the day, and they say India still presents a strong buying opportunity at these levels. Listen in.
Market gives you any opportunity where if correction happens like it happened today, and it might happen maybe in weeks to come, that will be a great opportunity to enter, because I think as far as the Indian macros are concerned, they're very, very well in place. I think, interests are coming down, capital expenditure is beginning to happen. I think whatever government has done in last 1 year, I think impact of that will begin to sort of reflect in the corporate earnings. So our belief is that probably this will be next 1 or 2 months. One is this, and then Fed debt issue might again come back. So this kind of event will be a great opportunity to kind of buy, because we do not see many risks to the Indian story per se. And once the global events start settling down and they are over, then probably investors will again come back. I mean, India still by and large has done very well, if you see as compared to
yes,
the
it has been resilient, and that resilience has been proven today as well. But because specifically speaking of the technology sector, because, you know, following Tech Mahindra, we've now seen the third company issue, in a sense, a profit warning, so to speak. What is the outlook now as far as technology is concerned, especially since it's linked so closely to what happens as far as global markets and the global economy goes, and of course the currency volatility?
Absolutely. So I think, you know, our belief is that US is doing very well. Europe side there might be concern as far as the demand is concerned. Hence the, you know, growth outlook is at best 12 to 14%. But I think given the fact that given the valuations of those companies, it's not a, you know, they are not very expensive. So if, you know, 12 to 15% kind of earnings growth, with by and large most of the companies are guiding, and with, you know, at 15-16 times multiple, it's not very expensive. Balance sheets are very well in place. So we think the technology sector will, you know, give 15-16% kind of return in normal situation, even if the current situation prevails. Because I think one thing is very clear, that the demand outlook will start bettering only, it will not get worsened off, because I think there is more of technology in every, you know, every corporation in every country. Hence it is only set to improve. Right now we are going through a transitionary phase of, you know, going from the traditional ADM business to...
So would you buy tech at this point?
We would be positive on the technology sector, undoubtedly.
People have seen, you know, with monsoons and a whole bunch of other things having reversed, and prospects now of interest rate cuts coming through, that I think, you know, the market is seeing levels even at 81, 8200 as attractive levels to be, you know, buying into. And I think the longer this continues, the more these levels will become more and more attractive. So it doesn't surprise me that a big gap down opening was actually bought into. And if you see the figures that have come out at the end of the day, it kind of indicates the foreigners not being, you know, that active as it were, and locals buying quite aggressively. So in any shape or form, this pullback doesn't surprise me.
Well, that's the view for the equity markets. We did see a pullback today after the sharp fall in the morning. But let's talk about the currency market and tell you where the rupee finally closed for the day. 63.84 is where the rupee closed, weaker for the third session in a row, 20 paise lower, and a level last seen on the 16th of June. This is also the biggest single day loss for the rupee that we've seen since the 8th of June. But global markets, Nantara, on the edge.
That's right. Look at the U.S. markets first. We saw a sharp fall at opening with the Nasdaq on track to post its biggest loss since the 5th of May. Has recovered slightly since then. Wall Street is how we've seen the kind of sharp fall that we've seen. We've seen those markets recover. In the European markets, meanwhile, that'll come up for you next on your screen, traded with sharp losses today. Look at the German DAX down by 409 points, the French CAC down by about 190 points, and the British FTSE also going in the red, down by about 2%. In the periphery, the Italian MIB and the Spanish IBEX are down close to 4% apiece. In fact, 5% apiece is now how we're seeing those markets. Bond prices going up, sending the yields lower. So the German 10-year bond yield slipped to 0.78%, while the yield on the French 10-year bond down to 1.21%. In Italy, the 10-year yield was higher at 2.32%. And if we talk about the currency markets, the euro, currently back at 1.11 kind of levels against the dollar, and that's after it fell to 1.09 in early trade.
Well, that was the action across Europe and the U.S. financial markets across Asia, which woke up to the news of Greece walking away from the negotiation table. Didn't take too kindly to the developments either. The Japanese stock market fell 2.8% in mid-afternoon trade, and the South Korean market was down 1.4%. The Hang Seng in Hong Kong also dropped a sharp 2.6%. An interest rate cut by Beijing on Saturday failed to stem the fall in the Chinese stock markets beyond the first hour of trading, and that index saw a 10% swing from gains to losses and closed nearly 4% lower. Indonesia's Jakarta Composite closed the day nearly 1% lower. Sri Jagaraja has all the action from the Asian markets. Sri.
Broad risk aversion as the Greek debt talks break down and Athens imposes capital controls. China's stocks ended an extremely volatile session, down more than 3% on Monday. Investors shrugged off French monetary easing, dumping shares in panic. CSI 300, the index of the largest listed companies in Shanghai and Shenzhen, fell 3.3%. Shanghai Composite also lost 3.3%. On Saturday, China cut lending rates and the RRR at some banks after mainland markets plunged the day before. On Monday, main indices tumbled more than 7% at one point, but erased some losses after a state-backed provider of margin financing moved to temper the sell-off, saying the risk of margin trading is controllable and margin calls are relatively small. All of China's benchmarks, main benchmarks, have now entered bear market territory. June factory PMI from China tomorrow will be the next driver for the Asian markets. That is your Market Minute.
All right, Sri, thanks very much for joining us. That was a wrap of the Asian markets. But now, away from Greece onto CNBC TV 18 exclusive. The dark clouds over Sun TV may finally be clearing up. CNBC TV 18 learns that the Law Ministry has finalised its opinion on the renewal of the television network's licences, and this decision is in broad agreement with the Attorney General's opinion. That is the fact that cancellation is not tenable or will not be tenable in a court of law. Ashmit, who joins us with the details of the story that he broke. Ashmit, does this mean that the Information and Broadcasting Ministry's position on this issue will finally prevail? They've always said from the start that the revocation of the licence ought not to be done.
Well, what we can read into the developments is that there is a growing consensus amongst the various stakeholders that perhaps the MHA overstepped its mandate, went beyond the mandate with respect to not allowing the security clearance. What we understand is that the Law Ministry, after concluding its round of consultations with the Ministry of INB, has formalized its opinion, submitted its opinion, and interestingly, it is pretty much in line with what the Attorney General had said previously. The Attorney General, just to remind our viewers, previously had said very explicitly that not allowing a channel to run will be tantamount to violation of freedom of speech and expression. Furthermore, the Attorney General had also added that in cases where only criminal cases are filed, in the cases of economic offences, that does not constitute a threat to national security. He'd also gone on to say that very specific statutes and laws govern what can be deemed as a threat to national security, this not being one of them. And that is the opinion that we understand the Law Ministry has sided with. It has upheld the Attorney General's opinion, and in doing so has put the ball squarely in the court of the Ministry of INB to take a call going forward in the Sun TV license saga.
Well, finally, will there be relief coming in for Sun TV? It's not done till it's done, but the Law Ministry has opined in favour of what the Attorney General had said. The Attorney General was pretty much saying what the Information and Broadcasting Ministry was saying, so will the INB Ministry's view finally prevail? That's the big question. But of course, here on CNBC TV 18, we're continuing to track the action in Greece and the developments practically every minute. So stay tuned to CNBC TV 18 as we bring you all of that and more.